Hi, Tim Biggam back again this week in a absolutely crazy volatile week for Traders Exclusive. Before the opening today, we already had a 42-point range on the S&P 500 futures before the opening, from highs to low, basically up and down a little more than 20 points on each side. Last I looked, the market was selling off yet again. Anyone who's been watching this know I've been less than sanguine about this rally here, and we're finally seeing a little comeuppance, I think. And with the revenue numbers that came out this morning from Bank of America and Citigroup, and yesterday from JP Morgan, it looks like the banks are going to have trouble, going forward, creating that kind of, revenue growth and, earnings growth. They did pull forward a little of that loan loss reserve to kind of manufacture low earnings, but I think it'll be difficult for them in this trading environment to continue to meet those revenue expectations. On top of that, obviously, oil companies will be less than stellar earnings given what's happened to oil since Thanksgiving's surprise out of OPEC. So the two biggest contributors really to the S&P 500, banks, money center banks especially, and big oil are going to be showing some really, really severe earnings weakness, maybe earnings recession across the board there. Given the fact that we're at historic highs on multiples almost, I think it'll be difficult going forward here to really lift the market, even if the ECB comes out with the big bazooka and the overnight move by Switzerland, where they basically removed the floor on the Swiss franc, I think paves the way for next week's on January 22nd move by the ECB to come out with big QE. But the market, even in expectation of that, selling off here. So I think the free money parade may be getting a little bit mitigated here by real concerns about the economy, not only here but overseas. We saw copper getting annihilated yesterday. We're seeing some problems out of China. So I think growth going forward will be tepid at best, and given where the market's at, will be tough to grow. That said, with the volatilities at VIX around 25, I'm looking to sell out of the money call spreads as a trade structure, and that's really the trade I like here, given the fact that vols have basically doubled over the past month and a half. You can get further out of the money, receive the same credit. So I'm looking about 6 weeks out, about 7-10% out of the money on the SPY, using individual stocks, as I said, those bank names and so forth, to position in a slightly non-bullish position. Buying puts here with the VIX around 25, if we do get any kind of rally, can be a double loser. So I just like the fact that volatility's up and I can capture some bigger cushion for the same credit on out of the money call spread. So until next week, this is Tim Biggam, and especially in this market environment, keep those position sizes in place and those stops going. Take care.